Bitcoin just lost 27% in 4 months. Gold just hit $5,400. And the United States just launched major combat operations against Iran. The digital gold narrative? It's being stress tested in real time. And right now, it's failing. But here's what nobody on crypto Twitter wants to hear. This might be the best setup for Bitcoin in over a year. Let's rewind. Bitcoin peaked near $125,000 back in October. Since then, it's been a slow bleed. Tariff fears, hot inflation data, risk-off rotation, and now a full-blown war in the Middle East. On Friday, the US and Israel launched strikes on Iran. Iran retaliated, missiles hitting targets across the Gulf. Iran's supreme leader Khamenei was confirmed dead. Bitcoin dropped below $63,000 within minutes. Over $500 million in crypto was liquidated in a single hour. Meanwhile, gold surged past $5,400. Tokenized gold on Tether and Paxos spiked 4 to 5%. Oil jumped 12% in a single session. The message from the market is brutally clear. When bombs fall, money runs to gold, not Bitcoin. Here's the uncomfortable truth the Bitcoin community needs to sit with. For years, the pitch has been, Bitcoin is digital gold, a hedge against chaos, a safe haven when the world breaks. But every single geopolitical shock this cycle has proved the opposite. Bitcoin trades like a risk asset. It moves with tech stocks, not against them. When the Nasdaq sells off, Bitcoin sells off harder. February 2026 was Bitcoin's worst month in 3 years, down almost 15%, the worst February since 2013. The BTC-to-gold ratio is flashing a pattern that only appears every 4 years, the same signal that marked bottoms in 2014, 2018, and 2022. That means the ratio between Bitcoin and gold may be near exhaustion. But exhaustion doesn't mean reversal. Not yet. Short-term holders are selling at a loss. The SOPR is below 1. 1.9 billion in put options are stacked at the $60,000 strike on Deribit. The market is hedging for more pain. So why did I say this might be the best setup in over a year? Because panic is where asymmetric bets are made. Bitcoin is sitting on the $60,000 to $63,000 support range that's held twice already in February. Every previous Middle East escalation this cycle, the Israel-Iran strikes in June, the tensions in April, followed the same pattern. Bitcoin crashes on the shock, then recovers once traditional markets absorb the news. The key difference this time is how much leverage has already been flushed. The liquidation cascade already happened. Weak hands are already out. Short-term holders are capitulating. That's usually when smart money starts accumulating. Arthur Hayes pointed to treasury liquidity dynamics that could support a crypto recovery once tensions stabilize. Diplomatic talks are scheduled in Oman. If those talks reduce tension even slightly, a short covering rally could be explosive. And zoom out. Institutional infrastructure hasn't gone anywhere. The Bitcoin ETFs still exist. Corporate treasuries are still accumulating. The halving supply shock is still compressing issuance. None of that changed because bombs fell on Tehran. So what's the chaos capital take? Right now, Bitcoin is not acting like digital gold. Full stop. If you're in crypto because you thought it was a war hedge, that thesis is broken. Gold is the war hedge. Gold has always been the war hedge. But if you understand what Bitcoin actually is, a high beta liquidity play that front runs monetary expansion, then this is where you pay attention, not where you panic. The $60,000 level is the line. If it holds through this war and the Monday equity open, Bitcoin likely bounces hard into the 70s. If it breaks, 53,000 is the next stop, and the bear market deepens. Don't be the person who sold the bottom of every geopolitical shock for the last 5 years. But don't be reckless either. Size accordingly. Set your levels. Have a plan. War is chaos. Markets are chaos. But capital still flows. And it flows to whoever stays clear-headed when everyone else is panicking. The capital markets are chaos. Embrace it. And I'll see you in the next video.